If you are an estate agent, letting agent, or someone who is interested in the property market, then the UK Property Market Show, is for you. My name is Chris Watkin, and each week I'm joined by a special guest. This week it is Toby Phillips. We'll come to Toby in a second. Why should you watch this show? Well, if you're interested in the property market and what's happening, then this show is for you. The Land Registry always looks at data from sales that took place 8, 9, 10 months ago. The Halifax and Nationwide are looking at sales that took place 2, 3, 4 months ago. We're looking at house prices. We're looking at the property market, sales, exchanges, everything from last week. So if you want to know what's happening in the property market, buckle up, buckle down, and let's go and have a look at the property market. This week, I'm joined by Toby Phillips, who is very, very senior in the property franchise group, which is part of the Martin & Co. Empire with other brands. What he doesn't know about estate agency is not worth knowing. Toby, just for the ladies and gentlemen out there, which brands of the property franchise groups do you look after, sir?
Morning, Chris. Morning, everyone. So for me, I look after Martin & Co. Across the national footprint. I also look after the experience brands, which comprise of Parker's, CJ Hole, Ellis & Co., Country Properties, and Mullocks.
So you've certainly got your finger on the pulse. That I've just totted those up. There's in excess of 200 estate and letting agent offices there. So you're talking to these on a regular basis. So what you don't know about estate agency is certainly not worth knowing. Isn't that right, sir?
Well, learning more every day, Chris. But yes,
bless you. I like it. Hunger with humility. Right, ladies and gentlemen, we are looking at week 50 of 2024. Can you believe week 50, which is, for the purposes, is the 9th of December, Monday, the 9th of December, all the way through and including Sunday, the 15th. As I said, this is week 50. Now, just before we kick off, ladies and gentlemen, this will be the last show of the year, and we will restart the show in the middle of January. We always give it a couple of weeks in January just to get the market to settle down a bit. As I said, so please do come back in the new year when we restart the show. For those of you who have not watched the show, this show is about an hour long. The first half looks at the UK property market with all the stats that we have mentioned. The second half focuses on a town or a city. And this week we're going to Halifax. It will be the second time we've visited Halifax in the show's history in the last 2 years. We always like to revisit things and just see if things have changed. Now, if you're not from Halifax, you might not find that of interest. However, we will be using a bit of kit because what we're going to be doing is judging who is the best estate and letting agent. And we're going to be measuring agents on quite a number of metrics. And if you are an estate or letting agent who is having trouble with competitors, say overvaluing, say cheap fees, poor service, and you're offering, you're not overvaluing and you're getting good prices for your houses, this bit of kit that I'm going to be using to analyze and judge who is the best estate agent in Halifax is the same bit of kit you could use to prove to vendors that you are the better estate agent. So, as I said, if you're not from Halifax, please do watch that part of the show, and you can see me using the bit of kit, and potentially you could use that same bit of kit yourself to combat overvaluing and other such things. Toby, before we kick off, as I said, we are in the middle of December. Just give me a minute or so of the flavour. I'm assuming that the property market in your offices, as everyone's gone to bed, and basically it's Christmas party season all over, and everyone, is that correct or not?
No, on the contrary, Chris, we are still very busy, and it's not a plug, not talking the market up, but factually, and you'll see it from your numbers. We are still extremely busy. The sales market is still extremely buoyant. Lettings doesn't stop. Obviously, with looking into the future, obviously there's a lot of work being done for the preparation of that. But in terms of the general market, kind of as we predicted, it's running the full length this year, and we believe it will probably be one of the busiest Decembers we've seen on record. So certainly, just from the agents, as late as last night, we are still seeing deals tying up. We are still seeing, and this weekend we're still seeing a very busy levels of activity.
At this rate, I might have to do an extra show next week.
It's worth it. It's worth it, mate.
Well, we are filming this on Wednesday, the 18th of December, ladies and gentlemen, and this will be coming out on Friday, the 20th. Whether I can probably whip up some stats and just publish them early next week. I think going to a show next week, I think everyone will have different focuses, but we might be able to get a few stats out for that. Okay, without further ado, let us go and have a look at those stats, Toby. Here we go. So, Toby, we always start with the listings because that is the natural place to start. And so far this year, we are on 1.687 million. You can see the graph, mate, can't you? Just wanted to just double check that.
Very clear, Chris. Thank you.
Excellent. So we're on 1.687 million listings for the year, which is 8.5% ahead of last year's figures of 2023, where it was 1.55 million, and 7.4% ahead of the average of 17, 18 and 19. Number of listings this week, 17,095, which again, as you can see on the graphs now, is decent compared to the last year where we're at 15, 22 we're at 14, and in 21 we're at 16. So, and again, there's a flavour of 2020 at the moment, not as silly as 2020, but still. But again, let's before we can make a judgment on that, let's look at all the stats. The average price of a property coming on the market is 391, which is slightly lower than the figures that we've been seeing. But again, we'll look at that in greater detail in a second. And then I think the most important graph here is the week by week, and 2024 is the white line. And then we've got 17, 18, 19, and 23. We haven't on this graph put on 2021 or 22 because they were strange years. But again, if you look back at old shows, again, very similar to those sort of figures that we're seeing there. But I think for the purposes of listings, I just wanted to keep a clean graph. And as you can see there, that the numbers are dropping as would be expected. Over to you, Toby, for your thoughts on the listings.
Yeah, it's very, very much what we're seeing, Chris. It's no surprise to me looking at the stats this morning. Certainly, is there a little bit of stamp duty push? It's not as noisy as we thought it was going to be, but we do think there might be some reflection in those numbers. And I think when you're looking at the graph in front of us, you're looking at 24, and the best comparison really is forgetting almost 21 and 20, really. We want to compare with, your 17s and your 19s. So it's what we're seeing. There is a push. The house price is a surprise. That it's lower than what we've seen, but although it is higher with the exception of 22. So it's definitely what we're seeing. There is a push to sell, and it'll be interesting to see, whilst we're looking at UK stats, if there is a north-south divide between the listing volumes.
Well, it's interesting is that I now have some additional help behind me, and now we have been compiling the regional stats for the last of 2024. So therefore, in the early new year, I will be able to analyse the regional stats and just see if there's any difference. What you tend to find is that inner London, and inner London is SW, SE, EN, NW, and W. That is classed as inner London. That is a world to itself, but everything else kind of just moves up and down in the same tide. This graph here the red line shows the average asking price of the properties coming onto the market, and you can see here that it is very cyclical. So here is 23, so that's spring, and then we have a dive down during the summer, and then this and again it happened identically as spring. This is London. In fact, again, regionally, within like a mile, 1 or 2 mile radius of Fulham, around there, it's like that SWW postcode. Just the prices are so big. This is that gap there. That's no more than 5,000 homes coming on the market in like a 4 mile radius of Fulham, pushing that up, and then down she goes. And again, it's the gap between the two that we just have to be aware of.
Very much so.
It's about long-term average is 16 to 17%. We're running in single digits. But again, it does tend to happen every year. The orange line, just for the benefit of everyone, is the average asking price of a property when it went sale agreed. We don't know what it sold for. But what we do know is, and I've said a number of times, is Hamptons do publish some stats where they hoover up the stats from everywhere. And that, I don't know if you're aware of this, apart from 20 and 21, the average gap between asking price and sale agreed always hovers between 1% and 2% less than the final asking price. Isn't that interesting?
Very interesting. Yeah,
Yeah.
very interesting. And again, you've always got to look at the time lag here. Whilst in the last few years we haven't seen a time lag, but you're probably looking here in terms of the listing to sale ratio being slightly longer this time of the year
Yep.
than it has been, when we get into the sort of the real spring marketplaces. But that's an interesting that's an interesting site, Chris.
Yeah, and what we're looking at here is the gap between the two, ignoring the blips. Isn't it interesting? Here is this is that
Huge.
that in 20, and again, it would be interesting to actually push that graph to the left. And again, I now have the help that Annette can enable me to do that. Have you noticed that the sale agreed price that the posher houses tend to sell in the summer? So this is winter, spring, summer, autumn, winter, spring. Look, I've just noticed that.
Yeah, look at that. Look,
Yeah, I mean, this is a lot spikier on the listings, but this is saying me is more expensive homes sell in the summer. There you go. That's something new that we've just spotted today.
yeah, and again, it's very a traditional outlook that
Yeah.
tulips are up. I think we've discussed it a few times. Tulips come up, and that's the real feel good push.
Yep.
There will be a little bit in there regarding school dates, etc.
I
Get it
think
on for spring.
Hartley Homes. Yep. There goes.
Get yourself cashed in for the September term starts, but it's a really clear trend.
Yeah, and ladies and gentlemen, to move the average, the UK property market is such big numbers. To move it from 340 up to 380 is quite sizable. It isn't just selling a few posh houses at Savills. This is big stuff. Interesting. Then she drops down. So let's make a note to see if we can push it backwards to see if that's been cyclical in the last few years. Right. Let's move on to price reductions. And now again, let's just start off with the raw numbers. We've reduced 10,318, which sounds great, and that looks a fantastic graph. The average price of a property being reduced, 353,000. So the lower end properties are being reduced. Remember that the average asking price of a property coming on the market, 391. The average price of a property being reduced, 353. So again, that's telling me that the lower to middle end ones are being reduced more than the upper ends. So come on, guys, you posh agents, get these posh ones reduced. This, I think, is a more important graph. This is a monthly graph. We do bring it out every week. This shows you the percentage of your residential sales stock on the market being reduced, and that dropped from 14% to 11%. I mean, just over 1 in 10 of your homes being reduced a month is not good enough. I'm sorry, especially when only 53% of homes are being sold. What's your thoughts on that?
Yeah, I think there's two schools of thought, Chris. I think if a property in this particular market, we've just discussed how hot it is, with the backdrop of interest rates and probably the exciting parts we're going to see moving forward. Having this priced correctly is key, but also, within the first 4 weeks of that agency agreement, that's really where we should see either an SSTC or a price reductions, which will lead to both. Anything beyond that is very much getting into the long grass after that period of time. So I'd expect to see more, but also a timed price reduction at this stage of the year. And again, making sure those prices are absolutely, you've tried it, you've tested it, you're now coming into the Boxing Day extravaganza, the New Year click through. That's when there's no more time for testing. You've got to get it right because you're going to get more eyes on it over the next 14 days than you probably had on the previous 14 days.
You're absolutely bang on. And, I know some people deride some certain estate agency chains of doing the Boxing Day campaign. I just say you're using the market to your advantage. And that certain large chain will be dumping a load of homes on the market on Boxing Day. So make sure your photos are bang on and make sure your price is bang on that makes it stand out like a sore thumb. Let's move over to sales. Okay. So selling houses this week, we've sold 19,000. Okay. Hold on. There we go. There we go. 19,120, which I think is amazing when you consider that we sold 15,000 in the same week in 23, and we
Yeah.
sold 13,000 in 22, and we only sold 17, I say only 17,800. We are we're just over 1,500 more, well, just slightly below 1,500 that property sales than 2021. I mean, you'd have taken that a year ago, wouldn't you?
But Chris, look at the level of instructions, the level of sales. You know, the instructions have just led through, and again, a year where we've had elections, budgets, etc. This is when it will run longer. So that's no surprise, and it's a really great sign as we end the year and carry on into 25 on the backdrop. So I don't see that changing, and actually, it's really encouraging.
I think the important thing here, and you're absolutely right there, Toby, is sales are up, but as are listings, and the percentage of homes that are actually selling is still around that stubborn 53%. Okay, so you are selling a lot more houses, but you've put more houses onto the market. So therefore, and again, the percentage of homes that are selling 53, no change in the last 2 years.
No.
So again, it depends whether you judge it on whether is the market bringing your sales up or you doing a better job. And I think
Exactly. And I think when we're quoting those stats of 53, bearing in mind it's coming from the actual unit number will be larger because we're coming from a larger number of instructions. So actually, if we just did it in real hardcore
this
uh,
is
unit terms, it would be larger. Interesting, the percentage not moving. The fact is we will be selling more. If it's staying at 53, you'll see more sales because 53 is from a larger backdrop, Chris.
yeah,
So
of course it is.
even though it's stuck, it's almost ironically a good stuck as long as you're bringing on more instructions.
Bang on. So I mean, this graph here is the percentage of. So this is going back to 2019. And each month I measure the number of homes that have left estate agents booked that have exchanged versus the number of properties that have left estate agents booked withdrawn where you haven't turned a penny. And you can see here in 2019, that was around that 53-54% mark. We obviously had the drop down because of COVID. We then went up into the late 60s in 20 and 21, and then she eased off in 22, and she's been around that 53-54 mark ever since. Isn't it interesting that? And one thing I have noticed, Toby, is that there is almost like a natural resonance to the UK property market. So, and again, that's regionally based apart from London. It just kind of all goes up. If you can try and compare one region to another, it hardly changes. Even though something that happens in Bristol, there should be no connection with what's happening in, say, Blackpool or Edinburgh, but it all does move up and down apart from London. So
Yeah,
anyway,
and I think, Chris, as we've said on many occasions, London, the dial moves in London either way. It's the biggest impact we'll see in the market. And I do think, and again, one of the things I'm slightly seeing, I don't think it's really transferred into the MI yet. I think that the rental market is starting to show real acceleration signs in the north, whereas the sales market, I think, is accelerating in the south. Now, these stats don't show it yet, but it'd be interesting as we do, as you do this show, as you probably get into January and February, just to monitor that because I think lettings are that much more buoyant in the north. In the south, I think it's very, very much more a sales buoyant market.
good stuff. Well, I'll have my turkey over Christmas, and then in the new year, I'll bang some numbers over and share it with you, ladies and gentlemen, in the new year. Cumulative year to date gross sales is 1.23 million, which is 15.4% ahead of last year. And we are 9.1% ahead of 17, 18, and 19. The average asking price of a property sale agreed is 350,000, which again, we're showing on the previous graph is nice and close to what the listing price is. But again, we can't take a week in isolation. It's the trend we're looking at. This is my favorite graph because that really just basically tells you everything. Look at that white line. It's 2024.
Fantastic.
And see how much it is above last year at 23. And then you've got the other years on there as well. So, that is really good news on that one. The sell-through rate is the number of properties that you're selling out of your sales stock. And at the moment, we are on around 14.5% on that one. And again, this graph here, we showed it for the first time last week. It's a monthly graph. The red line, which is outlined in yellow, shows you the ratio of sales to listings. So therefore, in November, let's say you put 100 homes on the market and you sold 90, that's a 90% ratio, which again was roughly what it was, because listings were quite low in November but sales were quite high. It's the trend on that we want to see. But again, anything going in an upward direction is good. We just don't want to go over 100 because then it gets a bit silly. Anything on sales before we move on?
No, I think your comment there, over 100, we need more listings, Chris.
Yeah, especially when you consider there's withdrawals as well.
But that's a healthy number.
It is I'm very chuffed with that.
That's it's one of the, it's music. If it was music to my eyes, I don't think that's the phrase, but it's perfect.
I know where you're coming from, brother. Right. Okay. So the number of fall throughs has dropped this week, as I would expect. And you can see here, it does tend to drop in the November, December time. So this week we we fell through 4,800 properties. But again, we just need to take that with a slight pinch of salt. One metric we measure is the percentage of gross sales and the number of fall throughs expressed as a percentage of gross sales. So this is one metric some people like to use, and that's on 25.1, which is slightly ahead of the long-term 8-year average of 24.2, 24.3%. My favorite one, though, is, and I think this is a better judge of fall throughs, is what percentage of your sales pipeline fall through. The yellow line is the long-term average. You can see that's drifting downwards. And again, this week it was around 5.35. This month, or November, 5.3, 5.4. So again, that's a good one just to keep an eye on, ladies and gentlemen, just in case fall throughs. And again, you can see certain things. Look, that, a lot of fall throughs going up there. What was that? That was the trust budget, that there. And then that here was basically interest rates rising. And again, just getting a bit hot under the collar there. So again, that is what we're looking at. That's COVID. That was the trust budget, and that was interest rates rising. It's just interesting to see. Okay, anything on fall throughs before we go through to net sales?
No, I think they're holding, Chris, at the moment. Again, year end, we'll always see perhaps a bit of a clear out in terms of a few of those open chains that have been hanging around. But again, it's staying around that line would be a really good measure. If we could open our pipelines as what they were today because of the influx of sales with that level of fall throughs, that would be a pretty good start to 25.
Okay, well, interesting you mentioned pipelines. We do have those stats. So we always do this at the end of every month. So basically, this is the white lines are the 31st of October, are the 31st of November, stroke 1st of December. Okay. And as we went into the 1st of December, there were 487,000 properties in estate agent sales pipelines. And you can see that is a nice healthy growth compared to the previous years. And again, looking at the 17, 18 and 19 figures. And again, some people are going to say, well, that's because chains are taking much longer, 17, 19 weeks for the average conveyance. Again, I think agents have very short-term memories. It was taking 17, 18 weeks just before COVID. We were all complaining about it. This is just a better market. And again, now some of that is going to be cleared out, isn't it, in December? Let's be honest, because people want to get through. But, estate agents, normally Q1 is really tough for cash flow, but they're going in with decent pipelines. And again, we've got the stamp duty issue in the spring in England. So, stamp duty. So again, I think agents are in for a bumper Q1, which is really good, because normally Q1 is really tough. Whilst we're on it, ladies and gentlemen, we'll just have a quick look at this number of properties for sale. And again, you can see here that we're on 677,000 properties going in on the 1st of December. And again, all the yellow lines are the same time, all the years going back. Let's just put some context on that. That was at 1.2, 1.4 million back in 2008. So therefore, as long as we're keeping at that sort of levels, should be okay. It's when that starts getting up to around 1 million, that's when alarm bells and oversupply kicks in. Right, let's look at net sales. Net sales, we have net sale 14,320, which is really decent compared to 23 at 11.9 and 22 at 9.2. And again, net sales, to say that you are at 800 above what it was in 22 is quite tasty. In terms of net sales year to date, we're 17.5% ahead of 23 at 938. Remembering, ladies and gentlemen, this is second-hand, not new homes. So therefore, we have to add new homes onto this to add our final figures. We won't have the final figures for transactions until probably April, May, but I'm predicting about 1.23, 1.24 million. Okay, there you go. As I said, 10.6% ahead of the more normal years. So again, isn't it interesting that sales we are 9.1% ahead of 17, 18 or 19, but we're only 6.6% ahead of on net sales because fall throughs are slightly higher generally before COVID. And again, favorite graph, that white line there just shows you where we are. I mean, again, you can see that's going to fall off a cliff next week, but again, we'll report back. That's, decent.
But even when you look at this particular graph, Chris, make it in line with one of the best ever years in 21. You're very tracking, almost in line, which is great. And if I was an agent out there today, I'm interested now in getting as many exchanges through before I break, but also what's my opening pipeline going to be? Bearing in mind my pipeline is still filling up. This week it was still filled up. So actually, what we're going to see is if I was an agent now, I'd be saying to myself, what I finish at, I would like to think that I'm going to start with at least 80% of my closing pipeline as an opening pipeline. So again, it makes a very, very encouraging budgeting figure for most agents out there in the sales market.
It is, but unfortunately, their costs have gone up as well, and isn't it interesting that I have to ring up lots of estate agents, and again, you can tell the ones that get paid quite well versus the ones that are on minimum wage. It's pretty obvious, and
it is.
Yeah.
I mean, this should have been a very good earnings year next year as well. If a lot of my agents are doing their planning now, very buoyantly. It's about growth, but also, with the backdrop of what we thought was going to happen in 23, which hasn't happened. It's been a wholesale better. 25 looks even more encouraging.
Good stuff. Right, finally, again, we did announce this last week, but again, just so anyone that didn't watch the show, we very closely track the pound per square foot at sale agreed because that has a very close relationship to what the land registry will be in 5 or 6 months' time. So if you want to know what the land registry will do in 5 or 6 months, just follow that orange line. And again, everyone was fawning that the property prices I've got, in the last couple of weeks in the papers, prices gone up really well. Well, we were predicting that because look, that was what we went back in May. We were saying prices are going to go up. I'm just telling you here and now, ladies and gentlemen, the land registry will say prices have gone down in the spring because they went down there in late summer, early autumn, and then in May, June, they'll come back up. So there you go. If you want to know what's happening in the property market, follow that orange line. Anything else, my friend, before we go and to Halifax?
No huge surprises there, Chris. I think the biggest thing is let's not underestimate the impact of the interest rates against where we are in inflation at the moment, and I think that is having that will have a very big effect, a positive effect in terms of our outlook coming out of this year into next.
Good stuff. Right. Without further ado, ladies and gentlemen, we are now going to go to Halifax. So here we go. Okay, Toby, let's look at the Insight platform here, and it comes from 20EA. I must declare that this kit is a bit of kit you as agents can use. There's a free version where the numbers are quite limited. There is a local package, regional package, and national package. And if you're an agent that suffers from overvaluing or poor service from other agents, you can prove this in the data, because this is like Rightmove Plus on steroids. For the purposes of this report, we are looking at the postcodes of HX1, 2, and 3. I'm fully aware that there are some postcodes at the top end of HS6 and HX4, which some agents do cover from Halifax, but for this purposes of this, we are just looking at HX1, 2, and 3. I will declare that I get this given to me free of charge on the understanding that I mention it, but don't mention my name if you like this bit of kit and you want to buy it off 20EA, because I'm not on commission. Toby, I know you're a big fan of it yourself, so should we go and look at those stats? Okay, here we go. For the purposes of this, we are first starting off with residential sales, and the first thing we look at is new instructions. Okay, so we are looking at between the 1st of the 1st, 2019 to the 17th of the 12th, 24. So that's nearly 6 years worth of data. That's the problem with Rightmove Plus. You only go back a year. And I think it's important that you judge your performance not on last year, but on a wider term. And, agents are not very good at looking long term, are they? Bless them.
I've got to say, when you just said it's 5, 6 years ago, you don't think 19 is, but actually, to have this record of data, and I think 6 years is quite a significant time, Chris. And it really, if you want to get into the reads of real trends, this is how far you got back. And I really like this insight model. From that point of view, when we're opening offices, when we're looking at new markets, when we're looking at white spaces, this provides a perfect platform for us.
It's an amazing bit of kit. Right, let's kick off. So the average price of a property in Halifax in the last 6 years, near as damn it, that's come onto the market because it's new instructions, is 205,000, and 11,857 properties have come onto the market. Let us have a look at the different agents and see how each agent has performed. So this is the percentage of the new instructions. So this is your classic Rightmove pie chart, but it's done in a bar in a line graph. And you can see here that William H. Brown, which is part of the Connell Sequence Group, look, their long-term trend is a growth there. And that's really good. I like that. That the number one agent in most towns, the number one agent is drifting slightly. That's really good. So well done. Quite spiky though, isn't it? Good and bad months.
Yeah, absolutely. I think the significant thing, if you just look at the top line, Chris, is from number 10 to number one, number one being almost 3 times as large, which is quite a significant large. I mean, that's a big market share, especially in a volume market such as Halifax. That's really impressive, near on 12%, and to be in the top 10, entry level about 3.5%, that's a fairly dominant performance.
You can see here that the average price of a property that's put on the market is 158,000. When you compare that with the average of 204, then again, if we're using the analogy of supermarkets, which everyone understands, they're lower to middle. So they're more I would classify it as more of your Morrisons or Asda estate agent if we were putting people on a pecking order of hierarchy of which type of properties they get. But again, it's good for them. I mean,
volume market, Chris,
yeah.
it's all about the volume that you've got, in this market. Again, on the backdrop of that type of property price, there's lots of other things you need to be doing, but it all revolves around having the most instructions on this market.
Yeah, as they always say, if you ain't got it, you can't sell it. We'll actually look at how efficient every agent is about what they list versus what they actually exchange on, i.e. they get paid on versus what leaves out the door. Let's go and look at Peter David properties. Okay, not so. I mean, again, I'll just the graph there, it's in yellow, so you might not be able to see it particularly well on the graph, ladies and gentlemen, but that's been hovering around that 7 or 8% mark. I know there's a blip there in 21. We're not including new homes in this, ladies and gentlemen, but I would actually say that it looks like they've had a slightly better 24 there.
They have,
Yeah,
yes.
they have the slight growth
Yeah.
there. Again, the devil's in the detail. Let's go and look at property at Kemp and Co. Again, there's a slight growth there from around I would say 19, they were around 4 to 5, and now I would say on average they're probably around 5 to 6, even knocking on the door of 7. We will just look at the short-term picture in a second. Let's go and look at Reed's Rains, which is part of the franchise group. Nice and steady there. That's around that 5 or 6% mark. Hamilton, 256. So they probably are more your Marks and Spencers. And they're around the 5%. We will just have a quick look. Ryder and Dutton, which is part of the big Northern Powerhouse Agency Group, and I think it's Northern Estate Agency Group. Ryder and Dutton, slight growth there, not bad, guys and girls. You move, part of your lot, isn't it?
Absolutely.
Yeah.
Yeah. Good
Okay.
to see. Good to
Okay.
see.
Again, I'm noticing a slight growth from around 3 or 4 to nearer 4 or 5 there. Looks like just having a slightly bad month, but one bad month doesn't make a end of the world. Let's go look
Worth
at
probably mentioning, Chris, as well. You know, the U move model is very different. So again, it's an interesting part to see. You know, sandwiched between your Ryder and Dutton, your Reeds, Rains, and your Bridgefords of that more conventional model. So that's interesting.
Isn't it interesting? And again, I'm blessed by being a judge with the property, the best estate agent guide is that you move consistently are always in the finals when it comes to customer service, and more important, well, not as it, sorry, as important, the numbers. I mean, they're what would be interesting to know, and we'll have a look at later, is this: we're going to compare, as I said, exchanges to listings. So let's just see if you move in Halifax match their brothers and sisters around the country who
Very
have a
much so. Yeah.
higher percentage of let's see if they match that, because you move have a greater chance of getting your house sold compared to the more normal high street agents.
Yeah, and I think Chris, what jumps off the page for me in here is Halifax, as we said, the volume market. It's no surprise with William H. Brown in terms of listing count and some of the other really good agents on here. But for the U move as a hybrid model, that's probably one of their most volume performances. And again, Bridgeford's, that would be very, very much a bread and butter, in terms of property stock. So be interesting to see how they convert now.
Yeah. Okay. So, I mean, isn't it interesting that you've got a large corporate estate agent part of Connell Sequence at number one? I don't class Reeds Rains as a corporate because it's an independent, it's a franchise. And the next corporate estate agent, and again, I don't say corporate in a bad way, but is number 8 at Bridgeford's. Normally, you would expect out of the top 5 at least 3 corporate.
I am surprised at that.
So let's just have a quick look at Bridgeford's. There we go. Nice and steady. Redwoods, small estate, small independent. Not don't see. Bucox, Marsh and Marsh. Okay. Again, just ignore the drop. We're only into December. Relocate. Whitegates. Strike. Again, remember, Strike finished and went to PB. Charlotte Bates, Purple Bricks, Bramall's, WS Residential. Now, interestingly, there was an agent in here, I believe. Was it Redwoods? No, it was one of them that have here we go. I think it was Bucox here. Do you notice that finishes in
Yes.
Well, basically, what happens is Bucox got merged or bought out by WS Residential, who I think
Interesting.
which are the next town along. And you can see there we go. There you go. So you can see they got all of their new WS took all of the listings of Bucox, so they had a great May. That's why that jump is there.
And Chris, just a question for you, because I'm not familiar with WNS. Are they trading in Halifax or
No,
are they located outside?
just on the outskirts. But you got to remember, in that part of the world, towns are, yeah, they are separate towns, but they are right next to each other.
But it's interesting they've bought a more dominant agent in that town, which again, does really sort of bump their market share. Doesn't seem like it's dropping. It actually seems like it's continuing to
Well, it's
increase when you look at here.
Well, it's 5, but again, how much of that is being brought from the other? Interestingly, when you merge 2 brands together, 1 plus 1 doesn't always equal 2.
No, it doesn't. No.
And again, you've got to remember is that most people buy another agent's out for their lettings book. There
Yeah,
really isn't
exactly.
any real value I mean, in terms of acquisitions, estate agents are worth probably 50% of the sales pipeline on day of completion. That's basically what the market's paying at the moment. But they're paying absolute top dollar for lettings books at the moment. Absolute. We'll just finish off there because there'll be some smaller agents that just want to see where they are. Hunters, again, that's part of your, not your brand, but what your stable. I think that's
Absolutely.
again, there, I think they're in Elland, just over the river. So again, you're not going to get much in the Halifax if you're on the other side of the river. Okay, there we go. Let's move on and look at this, which is how successful you are as an estate agent. So most agents, let's just make that a bit bigger. There we go, ladies and gentlemen. So ignoring new instructions and ignoring sales agree, which I know, immediately what's screaming at me though is that the chances of getting a property sold 73.79. So these are the chances of sale agreeing a property in Halifax are just under 3 out of 4. Okay, because that's a 73. And look at this. We said, do William H. Brown?
88%.
Yeah, I mean, look at that top 3. I mean, they are flying.
That's flying.
That is really good. I'm liking those sort of figures. However, the real magic is in these 4 columns here, ladies and gentlemen, okay? Is a property will only leave a books for one of 2 reasons. 1, she exchanges, or 2, she withdraws. 1, you get paid on, exchanged. 1, you don't get paid on, you've wasted your time with withdrawals. So therefore, in the last 12 months, because we're looking at the 18th of the 12th, 23 to 17th of the 12th, 24, in those 2 postcodes, 250 properties have left the books of William H. Brown, okay? 180 plus 70, of which 72% of them have exchanged contracts. The average in the town is 63, which is really good when you consider that the national average is 53.
Yeah.
But I'm telling you here and now, William H. Brown, 72% of the properties that they've put on the market. So they're market leader, and in that top 10, okay, Marsh and Marsh are much smaller at 73. But that is really impressive. That is because I'm making a sweeping statement here. If I was, and I've done this show every week for the last 2 years, the larger corporate estate agents tend to have a lower exchange rate compared to their peers.
But this is, Chris, it's probably a perfect example of that sort of that corporate plan in terms of and again, I don't know fees here. I don't know whether there's an inducement here, but number one, when you look at those top line figures from the William H. Brown in number 1, that's really impressive across the board. But what it does highlight is you look at the withdrawn column in isolation, you think, oh, 70 withdrawn, but actually from 245. So you're coming from such a bigger landing point. And again, a lot of these independents will be looking, and I've been an independent, I've been a corporate. There's probably a balance in the middle, but when you've got such high market share and you're selling at 88%, it's just the formula works. It works in this town.
I'm honestly, if I had a cap, I'm doffing my cap to the team at William H. Brown in Halifax, and I'm doffing my cap to the area manager because it looks like you're giving them a rope to hang themselves with. That is really impressive, especially for a large corporate. So really, really well done on that one.
I think, Chris, it's worth saying that in this town, you can see it working. Does it work everywhere? That's up for debate. But this is where that model, and again, if you were looking from a real hardcore corporate model, if you attached 40% of those transactions with a mortgage, that's where that branch will be extremely profitable.
And again, you so bang on. Remember, we said in the previous graph that William H. Brown were a lower end property, but the lower end properties have a higher propensity to sell. Let's just go step back a second. You've got a bit of time, haven't you? No, don't worry. No one's watching the show, so we've got a bit of time here. Let's go and look at the posh bits, okay? And see which agents are really pulling trees up. It's Charnock Bates. So Charnock Bates look like the big agent with the posh properties. That is massive. Okay. Let's just, okay. And they've owned, okay, let's just look at China. Okay, there we go. It's going to be a lot spikier, ladies and gentlemen, simply because the numbers are much lower. But that is impressive. So let's go look at Charnock Bates's. There we go. Let's go and find it. Here we go. So their exchange ratio is 55. So other agents are going, well, they're not very good. So we'll just for what's sake and giggles, let's just show you what the difference is, ladies and gentlemen, of when you look at the lower price properties. You see here, your exchange ratios drop like a stone. The low stuff, you've almost got like a 90% chance of selling. We'll do that in a second. And the posh stuff has a lower chance of selling.
Yeah, very much so. And that's, it's horses for courses. If you look at an overall round performance in every price point there, you're probably picking someone like Property at Kemp and Co. So they are, number three in terms of the overall marketplace in terms of the average prices. But when you go into the higher range, they still feature very highly, where they are probably one of the only agents that does that. So again, that's a model there where they are dipping into more ponds probably than any other agent in Halifax.
Yeah, and just notice how, as I add the price ranges in, how this number, this number here, ladies and gentlemen, and I'm sure you're looking at your own numbers here, is changing. And it will be going generally in a downward direction as the average gets dragged down. There you go. Anyway, let's get back. Let's just back to compare. Yeah, I found again, no, don't worry about it. No one's watching this, mate. Right, let's go. So those are your exchange numbers. We'll just have a scroll down and just see how everyone else is doing. Some good numbers there. Look at that. Yopa at 91. That's good. I like that. EXP at 87. Well done, guys. Redwoods at 81. Really well done. Whitegate's at 75. It's one of Rob's. So yeah, there's some decent numbers in there. Interestingly, Reed's Reigns at 57 and Bridgeford's at 59. I wouldn't expect that from Reed's Reigns. That's on the lower side of them. I know the management there, strong, really good. So that's probably an area of improvement that I would be looking at if I was managing that particular office. And ladies and gentlemen, I'm not criticizing, just looking at your stats, okay? Okay, let's have a look at fall throughs, and fall throughs 21. That's all nice and tight. Marsh and Marsh at 10. Isn't it interesting? I wonder if they have reservation agreements. I don't know. It's just that reservation agreements will bring your, I don't know if you're a fan of them yourself, Toby, but I'm a massive fan of them. There are a number of providers out there, but they'll get your fall through rates to single digits.
I'm a big fan, and again, when you look at Marsh and Marsh, they have something that their SSTC at 89%, which is excellent. They're exchanging through at 73. For in terms of looking just across that line for line 8, that Chris is pretty much the most impressive jump out in terms of conversions. There is something they're doing there. Interesting. We looked at two of the Reed Reigns, not a corporate but were a corporate, as they will still have some sort of that sort of those ideals there. One of the things I would say is, when you look at Bridgeford's and you look at Reed Reigns, they really jump out in terms of turn, in terms of the exchange turn they're performing at. Are they using the big volume conveyancers against some of the more independents using the local firms, slightly more nimble with a buyer's agreement?
Could be. And another thing that's screaming at me is this, is whenever we go up north along that M62 corridor, be it Manning Staton or Ryder Dutton, I always expect them to be in the top 3. And it's
Yes,
quite, and they really do. When it comes to performance, they truly are one of the very best estate agents in the UK. I don't say that lightly. No, they're not customers of mine. I just look at the stats. I'm a stat geek. They're normally in the top 3. So I don't know what's happening in Halifax there. Just very, very different. Right. So fall through is nice and tight. Let's see who's changing their prices. Okay, so 28%. Kemp's only reducing 28% of their properties. They're on a 69, which again, not bad. which is very close to William H. Brown. I think Peter David at 65, I might be just slightly concerned. Reiterates with what he's mentioned. Um, William H. Brown, again, I would expect them to have higher price changes. So again, that's telling me there is, unlike some of many of their sister branches, they are. I wonder if they're overvaluing, or if they are, they're getting the price down pretty quickly. So that's telling me William H. Brown are really good at vendor management, because they might be over. Well, we'll have a look in a second if they are overvaluing, but they're getting their prices down and getting them sold. Anything else before we move on?
No, that tells a really interesting story, though, Chris.
Well, let's have a look. Okay. Well, does look like William H. Brown are slightly overvaluing, but they're getting the price down really quickly, which again, there is such a thing of ethical overvaluing versus unethical. What do we mean by that, ladies and gentlemen? So ignore this line here. That's just your new instructions for the last few years. We're looking at, in the last 12 months, out of all the properties you've put onto the market, how much have you overvalued them by? And that's what this column is here. How is that measured? Insights will have an automated valuation model, like a Valpal figure, others are available, on every property. And then they look at what you put the house on the market for and compare the two. So William H. Brown are overvaluing by 1.65%. Peter David properties are overvalued by 0.54. Kemp's, they're keenly pricing their properties. They're going slightly under. And then we can now see a nice tranche of 1.86, 1.5, 1 point here. So nice and tight here. We're not seeing the sort of figures of what we see in London, where it's 3, 4% on average. So that's your overvaluing percentage. This is what do you then achieve from your original asking price. So William H. Brown achieve on average 1.54% less than the original asking price. Peter David 2.2 less than the original asking price, and Kemp & Co 1.59. Now, what does that all mean? Because people don't like percentages. So this, as I said, is a model. And they say, right, if everyone put on a £250,000 house, what would each agent achieve? And again, what William H. Brown overvalue, they're still getting a damn good price for the property compared to the average of the town of 245. And you can see all the figures down on this. That this is the model. This is what's telling me William H. Brown overvalue, very similar to numbers 3, 4, and 5, but compared to the big agents in the town of Peter David and Kemp Property at Kemp & Co, a lot more than their biggest competitors. But they are getting their prices down really quickly. So it's showing good vendor management. I like that.
And it's probably showing, Chris, we've discussed on some of our sofa conversations, they're setting up the instruction to not only to win the instruction, but in terms of that partnership agreement with the vendor. And I think what will no doubt be happening in this town, William H. Brown will be known for, don't worry, they'll overvalue it and then they'll reduce it. But actually, the stats
don't back it up. The stats
they
don't
back it up. You know,
no.
it's a model that will be criticised by competitors, but just look at the exchange column, which is what really matters. Is they're taking on more, they're exchanging on more. How they get to that is by way of gaining more stock.
Hang on. So therefore, Peter David and Property at Kemp & Co might be going around saying holier than thou, and we properly priced. But if you look at these stats, is it time, if Peter David and Kemp & Co wanted to take a march and grow their market share, then my advice would be probably start overvaluing a bit more.
Well, there's another argument, Chris. There's nothing wrong in the Peter David or the Kemp & Co model. What you've got to remember is the cost of putting these instructions on against putting on less and selling a higher percentage.
Okay.
So William H. Brown have got a perfect combination. But I suppose when you look at this, if you're sitting independent, you're only going to pay for what you can sell. And it's a model that I've come across a lot where actually, do I want 20 or do I want 10 and sell 8, or 20 that I've got to pay for up front with all the ancillary costs? So there's probably a very balanced argument across both.
I think, but again, if you look at Kemp & Co, they're on 69, nearest down at 70. So they're not that far from William H. Brown. but could Kemp's slightly overcook the price to get more because they do shift them and it
It
works.
just might be a cost factor. William H. Brown are coming from deep pockets.
Yeah, okay, let's be honest, their portal prices are going to be cheap as chips compared to the full fat price these guys are going to
Well, yeah,
pay. Okay,
it's a balanced argument, I think.
it is. Okay, so you've had a look at the stats there, ladies and gentlemen. Let's move on and look at how quickly you will sell houses. So in the last year, 70 it's taken on average 70 days to find a buyer. So that's 24 compared to 58 days in 23. Okay, there goes. On average, let's see how quick William H. Brown sell their houses. So again, look, taking 80 days to find a buyer. So that is matching up the fact they're reducing the prices. They're overvaluing, they're working the stock, bringing the prices down and getting the thing sold. That tells me that if someone in the negs or the valuers are doing the price structures or not doing the salami, will truck off £2,000 a time. Let's look the other two big agents, Peter, David, and Kemp. Let's go and look at those. Okay, so Peter 62 and Kemp's. Where's Kemp's on that one? 62. So therefore, Kemp and Co are getting their houses sold on average around 20 days quicker. Now that is important, ladies and gentlemen, because, and again, I'm going to give you some extreme figures here. If a property takes within 25 days to get a sale agreed, that has a 94% chance of going through to exchange. At the other end of the extreme, and it is a nice steady line graph, if a property takes more than 100 days to get a sale agreed, its chances of actually going through to exchange is 56. That's massive, isn't it? So you can see the sort of difference there. Okay, so nice and steady. It looks like all the sales progression times, the pink lines are very similar. So on average, it's taking 121 days from sale agreed to completion. Anything on that before we move on and look at lettings?
No, very clear, Chris.
Okay, let's look at lettings. And immediately we're looking at the elephant in the room, and that's open rent. 20%, 1 in 5 homes in Halifax are now going with open rent. And this is the scary thing, ladies and gentlemen. Purple bricks wasn't the thing that you have to worry about. It's these. I mean, again, just to make you aware, if open rent were a letting agent, you would need to combine all the letting agents from number 2 to number 14 and combine them together. And the absolutely scary thing is this, and I've got the stats on this. Half of the properties that have come onto the market in the last 2 years, it's 51.2% actually. Half of the properties that have come onto the market on open rent were previously with a high street letting agent. Scary. So therefore, as you know, if you actually look at the stats, I know you know the stats, but the ladies and gentlemen might watching this is landlords are not leaving. The stats prove that the number of letting properties that are on the market that for rent, not on the market, but actually, in the rental sector has grown in the last 4 years. It's not grown by the same rate as it did before 2017, 2018, but it has grown. What's happening is they're leaving your agents and they're going to put it through open rent because you've made it look so easy. You really have. All you do is you ring them up with problems, don't you? What's your thoughts on that?
Yeah, I think you can't deny that the market share number. You can't deny that the leaving agents are going open rent. And probably one of my biggest question marks away from the numbers is that model a profitable model against some of these more traditional models of property management, etc., larger portfolios, etc. That's a question mark that I think will linger on. But in terms of what we're looking at today, Chris, very impressive market share in a volume marketplace where you have to make sure you've got them. So, that open rent model, I can see really clearly why it would work in Halifax, definitely.
I'm sure you're aware, but anyone else watching, my daytime job is not doing these stats. But my daytime job is actually helping letting agents stop the rot with their existing agents, with their existing landlords, and actually attract landlords from open rent and other agents to their agency. So if you are a letting agent in Halifax and you are concerned about your stock levels and you just want to have a chat with me, I am more than happy, free of charge, for you to ring me up and say, what do I need to do? And I will tell you exactly what you need to do. I'll even send you 50 free videos on how to do it once you've had the call of what you need to do. You don't need to pay me to do it. I'm that confident it works. I give the techniques completely away for free. Okay. And in fact, what I would say, ladies and gentlemen, is this. Even if you don't want to ring me, just text me with the word free stuff. I'll give you the number now: 07950147572. If you text me the word free stuff, I will text you 50 videos on how to stop the rot. But over 100 agents in the UK pay me to do it for them. And if you are an agent that's wanted to stop the rot, but actually grow your agent lettings agency, unfortunately, it does also grow your estate agency, which is not a bad thing though. Then give me a call. But if you, or just send me a text message, I won't badger you. Just send me the text free stuff. But anyway, back to this. I'll get off my soapbox. Let's go and see which agents are growing or not. Staying still, William H. Brown, growth, Bridgefords. So it looks like Whitegates are dropping. Redwoods dropping. WS, about the same. Bucocks, again, they finished. So go on to WS. Hunters. Together Housing sounds a bit housing association-y, although there's not much doing much there. Interesting property, Kemp and Co, not big on sales, not on lettings. Ryder Dutton, again, not huge. We'll go down. These are small numbers here.
Yeah, it's interesting just looking slightly at the other end of the table at the W&S, obviously just to see the impact of that acquisition, Chris.
And again, that will show in the long term because we cannot measure stock levels, but we property books, but we can measure number of properties coming on the market.
But when you look at Bucox and WS being combined, you'll see over 700 there. So they will be through acquisition. They will be in the top three.
They will be when it eventually kicks in. Okay. I mean, again, that's just showing you that we don't have much data on the lettings, but it just gives you a flavour. And again, I think the big one is this open rent, ladies and gentlemen. Anything else before we finish?
No, just on there, really good spike from Bridgefords. They've obviously really concentrated on that, and you'll see that with the lettings market, Chris. You're the expert. I think we see more peaks and troughs. You've got a bit of an acquisition there, but also what you'll see is a real focus in various times of the year from certain agents on the lettings portfolio. And again, it'd be interesting to see as we come through to the new year that focus remains with, legislation changes, etc. I think we'll see one of the biggest changes in that space.
I really think the Renters' Right Bill, if you do it in the right way, can actually attract landlords to you. And
Definitely.
again, you as letting agents really just need, there's lots of webinars. I run some, good Lord are very good at running some. Obviously your franchisees have access to that internally, but just it looks scary, but it isn't.
No, it's not. No, it's an opportunity, Chris. If you speak to anyone in Scotland, you speak to anyone in Wales, it's an opportunity. If you're a good agent, there's nothing to worry about as a landlord, apart from the fact is if you are self-managing, you've got to really be aware. But if you're with a decent agent, absolutely nothing to worry about. And I think, it will be one of the biggest changes in that space. So if we looked at the Halifax figures in this point next year, how that moves, it will be the agent that is the most proactive.
Indeed. Thank you for your time today. Any final thoughts before we go?
No, Chris, thank you. Really insightful. Always enjoy doing these with you. Always enjoy looking at the numbers. And I think, the final piece is I think we're in for a very exciting 25. And I think there's a big opportunity in terms of transaction size across the sales market and the lettings to organically grow your portfolio. So a really good end to 24 and a really exciting start to 25.
Well, Toby, thank you for coming on the show. I think this is your third time on it, isn't it? Your third time?
It is, yes. I'm almost a part of the furniture now, Chris, I've got to say.
Part of the furniture, certainly. We'll get you back in 25. But more importantly, thank you, ladies and gentlemen, for watching this show. We've been now doing it for 2 years. It does take about 5 hours of my time a week to create the graphs, get the charts, and then produce it and edit it. But again, a lot of great feedback from it. Again, as I said, if you're a letting agent in the UK and you are wanting some help and guidance on how to attract landlords to your agency, then do bear me in mind. It's my daytime job. But in the meantime, thank you for your support. Thank you for the kind words. And probably more importantly, if you've got any constructive feedback, put them in the comments or send me an email if you disagree with anything I have to say, because only from that can I learn. Thank you, Toby, and thank you for watching. Happy Christmas, Merry New Year, and we'll see you in the second or third week in 2025.
Thanks, Chris.